Okay, now we're going to go ahead and calculate the net cost of owning, which will give us the cost of actually living in the house. So that will go in this chart, net cost of owning. We will need to know our cash outflows before taxes, which we already calculated. Our tax savings, which we also already calculated. And finally, our after-tax cost. So cash outflows before taxes equal, we have it already calculated right here, so we're only going to drag it down to make things very easy. For tax savings, we also just calculated it in the chart before, drag it down. And finally, for after tax cost equals our cash outflows before taxes minus our tax savings. So we're going to repeat the same formula, drag it down, and then now we have the after-tax cost. For example, in year 1 will be 17,202 with 48 cents. Now we're going to analyze what would be the net cost of renting. For renting, we have rents equal our original rent for year 1. We have it already here. We have already calculated our cost of renting in our property data, so we're just going to copy it and drag it down to make it all easier. Now in our next chart, we're gonna do our net cash flow from owning before sale. In order to do this, we're going to need our cost of renting, our cost of owning, and finally calculate the after-tax cash flow from own versus rent, which depending on which one is bigger, then we'll consider if it's better to own or rent, but then we'll have to also take into account the down payment that we have to make. So we're going to go ahead and do cost of renting, cost of owning, and after-tax cash flow own versus rent. So we already have our cost of renting, we just calculated it, so we're just going to copy cost of owning, same thing, which would be our after-tax cost. We'll just drag it down, and now we can see that owning is apparently cheaper than renting, but we're gonna do more math here and do cost of renting minus cost of owning, which will give us our after-tax cash flow own versus rent. So by this we can see that our numbers in cost of owning are lower than our numbers in cost of renting. However, we still have to consider the down payment that we have made, and if we are going to be able to recuperate that money after we either sell it or we have kept the house for a certain period of time. So we're going to go ahead and build a before tax cash flow sale. And for that we need the years, which are year 1, 2, 3, 4, and 5. And then we're going to need to calculate our sales price, which we already calculated before. We're going to need our selling cost. We're going to do mortgage balance, which we already have also. And finally, our benefit from sale on rent versus own. Okay, so for sales price, for example, we're going to have the sales price equals, we have sales price here already. Where are you, sales price? Right here, property value. So then we'll just have to drag it down. And then for selling cost will be our sales price times the 7% that we will pay for commissions and all of that if we do decide to sell this property. So we'll just have to secure that number and drag this down to complete our chart. For mortgage balance, we also calculated that when using our amortization table, which would be our balance. So we will just have to copy all these numbers, just drag them down. Apparently these cells are too small, so we're just going to do double click in these lines so we can actually see the numbers. Now for the benefit from sale, rent to own, we'll have equal our sales price minus selling cost minus mortgage balance, because if we do decide to sell this house, those are that is all the money that we will have to pay. We will still have to pay the mortgage balance, the selling cost, which means the 7% that we will have to give to the brokers, and also discounted from the sales price. So that is what we're gonna get extra. But then, for example, in year number 1, we will get a benefit from the sale of $42,000. However, we have put down $50,000. So that is not such a good idea, because we will be losing $8,000 from the equity investment that we made. In year 2, we can already recuperate the $50,000 and make a gain of $2,000. In year 3, we have made much more money. Year 4 and year 5, we have almost doubled the amount of money that we invested in this house. Now we're going to calculate the after-tax cash flow for the sale. In order to calculate the after-tax cash flow from the sale, we're going to have a sales price less selling cost, which we just calculated, less purchase price, gain on sale, exclusions, taxable gain, tax, and finally after tax cash flow from the sale. We're just going to move these all down a little bit. Okay, so for our sales price, we have already used it up here, so we're just going to copy it, drag it down. For our selling cost, we have also already calculated here. So we're just gonna copy it and drag it down. All of these numbers should have a dollar sign in front, so we can do that too. We can just add a dollar sign there, add a dollar sign right there. Now for purchase price, less purchase price will be equal to the purchase price, the actual purchase price that we paid at the very beginning, which we will lock so we can keep using it. This chart will help us analyze everything that will happen if we sell the house in the first year, in the second year, and third year. That's why we're using the same purchase price for everything. Now for gain on sale, we're going to do equal sales price minus selling cost minus purchase price, and then we will drag this down. Now for exclusion, we have 0 in the first one, 0 in the second one because those values are negative. Then we can qualify this 4,000 for exclusion, same thing with the 11,000, and then 19,000 for exclusion. We don't pay of capital gain up to $250,000 for an individual or $500,000 for a couple under certain conditions, such as the property has to be a residential property and whoever is trying to sell the house has to have lived in the property for at least 2 years, and also other requirements. So for taxable gain, we will have zeros all along. 0 tax because we're obviously not making any gain that will be taxable. And finally, for after-tax cash flow. Now for after-tax cash flow, we will have equal the benefit from the sale minus the tax, and the same thing for all the chart. So all of them are going to be pretty much equal to the benefit from the sale, because we're not paying any taxes on gain on sale, because we're not making more than $250,000 for an individual or $500,000 for a couple. So we're going to complete this chart in our next video.